Alright, you're welcome back. In this tutorial, we are still going to be talking about entries, looking at the entry model, right? And before you begin to look for entries, certainly you have to, draw out your supply or your demand zones from your higher time frame. And if you are a day trader, certainly you're going to be looking at anything from 15 minutes, 15, 30 minutes, 1 hour chart, and of course, sometimes 4 hour chart. You know, those are going to be your higher time frames if you are a day trader. In other words, if you are going to be, you are looking forward to, just make trades daily. You don't want to be in any position overnight for days or for weeks. You don't want to be holding any trading position. In other words, if you are not a swing trader, okay, if you're just a day trader, your higher time frame is of course that we range from 15 minutes to 30 minutes to 1 hour and occasionally um H4. That's your 4 hour chart. Now, when you have mapped out your zone, now there's a need for you to know which of the lower time frames should you be looking forward to have your confirmation for entries. Okay, now if you marked out your zones from 15 minutes or from 30 minutes, for example, um I think you should be using 1 minute chart, 1 minute chart, because basically what I'm going to be showing you in this entry model is going to cut across different time frames. Okay, it's actually going to cut across different time frames. All right, but the same concept, the same thing. So if you are using 15 minutes or 30 minutes as your higher time frame as a day trader, you should be looking for to use 1 minute 1 minute chart as your confirmation, okay, for the confirmation of your entry. And of course, if you're using 1 hour or 4 hour chart to uh to draw out your demand zone, that is drawing out your zones, either your demand or your supply zones. If you are using 1 hour or H4 as your higher time frame, then I suggest that, of course, you use 5 minutes as your confirmation, as your lower time frame, uh, yeah, for entry confirmation. Okay. Now, let's get back to what we are saying. So, having drawing out your supply zone from your HCF, that's like higher time frame. Now, no matter what the higher time frame you're using now, so you have drawn out your supply area from higher time frame. You know that the price we actually pull back to come and mitigate that particular zone before it sell off again. Okay, now when price pull into that higher time frame zone that you have marked out, now it is after then that you are going to switch to lower time frame. Okay, it is when price pull into that zone, it is when price hit that particular zone, not before then, but when price hit that particular zone, that is when you will switch to your lower time frame chart. Okay, now what is it that you are looking forward to see in your lower time frame chart? Now, in the case of a supply, price will have pulled down strongly, broke structure, and the rest of the criteria that we use to draw our supply zones. Now price is now going to be going back up to mitigate that particular zone before it sell off again. Now when price is pulling back, what will it be doing? What will price be doing? Price is going to be similarly in a uptrend. Okay, in other words, it's going to be making higher highs and higher lows on its way back up to go and mitigate that particular place. Do you understand that? Now, if you don't understand basic structure, I will actually ask you to go back to the video where we explain structures, especially when we are talking about trending markets, okay? So that you can actually refresh your mind. So when price is actually pulling back into that particular zone, it's going to be doing series of higher highs and higher lows, on its way back up into that particular place. Okay. Now, on your lower time frame, you are looking forward for the last. When price broke here, when price got here, there is a rejection somewhat in this particular place. Okay, there was a rejection and price pull back again. You understand? And price pull back again. What you want to see is that, okay, fine, there is a resistance up here, and now there is a new support around here. All you want to see is you want to see a change in character. You want to see a change from these higher highs, this series of higher highs and higher lows being made up onto this particular place. You want to see a change to a lower low and lower high. Okay, you want to see a change to lower high, lower low. Okay, because you are dealing with a supply, you are looking forward to sell, and you know that it is actually when price begins to plummet, that price begins to go down. That is when you sell when, I mean, you buy when price is going up. Okay, you sell from supply zone, you buy from demand zone. All right, okay, good. Now, so when price actually gets into this particular place, it found some sort of support and it went up. But at this point, this resistance over here is still what? Is still protected. It was not broken. Now, what happened? You are looking forward for this particular support to be broken, right? So what happened is that that particular support was eventually broken. Okay, so all you have to do immediately you see that broken support, all you want to do after that is to draw out the OB, that is your order block or your basing candle, in that particular area, that the last the candle, the last small candle. It could be a doji, it could be a pimba, it could be anything. That last small candle with with very little volume in it, with very little power in it, before the impulsive move that broke that particular support. Okay, the OB now is what you want to draw. Okay, so when you draw out that particular place, expect price to come back into that particular place. That is when you're going to be making your entries. Okay, it is on that particular hobby, that is when you are going to make your entry. Please, I really want you to get this. Now, the opposite of this, the opposite of this is going to be what you look for in your demand confirmation. Okay, in your demand confirmation. Okay, um all right, let's look at this. Now let's look at this. Let's say, for example, you have sorry, let's look at this. You have drawn a demand zone from whatever higher time frame you are using. You have drawn a demand zone from the higher time frame you are considering, right? Now all you have to do is make sure that price hit that particular zone before you begin to even look for entry. Don't look for entry. It doesn't matter what the market does before hitting that particular place. What market is doing before that particular place shouldn't be your concern. Okay, when price hits that particular zone, okay, now you, basically before price comes into that particular place, price, there's already, there's going to be, when price is pulling back into the zone, what will it be doing? In the case of a demand, it's going to be doing a series of lower highs and lower lows. It's going to be doing series of lower highs, lower lows, lower high, lower low, meaning that it's going to be in somewhat of a of a downtrend, okay, before it hits that demand zone again. So when it hits that particular zone, you switch to your lower time frame, right? Now, when price came into this particular zone, okay, looking at this now, when price came when price came into this zone, there was some sort of up movement, okay, some sort of rally, and price retraced again. But meanwhile, this particular place, this particular support was still what? Was still protected. And there he found a resistance over here, and price pulled a little bit back, and eventually it was broken. The resistance point, this particular resistance, what was broken, right? It is actually showing you that, okay, now we have actually changed character from series of lower highs and lower lows. We are changing to series of higher highs and higher lows, okay, for higher high and higher lows. So the very OB that caused the break of this particular structure, the other block that was responsible for the break of this resistance point, is going to be your entry. So that is where exactly you're going to mark out, and you will allow price to pull back into that particular other block. You can actually, make your entry at the proxima of that OB, or the 50% of that OB. It depends on exactly what you really want to do, okay? But anything from the proxima is actually really very good for you. All right, so you make your entry from that particular place. I hope you really understand this, and I'm going to see you in another tutorial. All right.